Hey YouTube, what's up? Dr. T here, and welcome to my hometown, St. Petersburg, Florida. We are located on the central west coast of Florida by Tampa Bay and in the Gulf of Mexico on the west side of the county. Take a minute to have a look at St. Petersburg in all its wonders, a piece of paradise to live in. If you are new to my channel, take a look around. You will find everything for one-stop shopping in the playlists. So back on today's trading, I went away and made a post from the midday, came back to find out there had been a downside. So we will go over to our, we've already done this, go over to our code. So we were on a potential sell here. It's sold off at the 731, so that's executed. We bring it down to the buy, put the data in, and that will then project where we need to buy in. We'll follow the downside, see how things are going. So this set out a downside. It's what now, 17? Is the bottom 16? I've got the bottom of 17 on here, so we can change the bottom as to 16, run the code, and so we had a seller 731, the bottom is 16. The buy, well, on the upside, if it goes up, we will buy at 727. We have a difference of 4, so that's good for us. So this data was put in on the spreadsheet. We bought at 731, we sold at 731. The model is doing exactly what you want it to do. It's protecting your ass. It's set to sell at this point. There was a spontaneous downside. It sold off. You are now in cash, looking for it to find a bottom. And when it rebounds off the bottom up to the appropriate point as projected by the model, and we have another downside. Look at this, isn't this wonderful? This model is working perfectly. 705, we can put that in and run the code, and you're live. You're seeing this live right as it happens. It doesn't get more exciting than this, does it? Model being tested live on Hadfield's. So I get tongue-tied at times. On my YouTube Bitcoin posts, get that right. So here we have a new bottom. So we would now at this point go in, if we had money and we were doing this live, we would there put in a buy at 716 for every penny. We're not buying or selling parts of what we have. This model is designed, developed, such that you put 100% of money on the line and you get 100% out of it. And it's developing a base of confidence that this is 100% safe. So far, this is the data that we've got, and we'll be adding more data to it to show that you can do this. You can put every penny under the sun you want in there, follow the model, test it out, show the variance, show that it works. Have the confidence-based build. So we are live on the downside here, and the model is working fine. It gave us a sell and protected us, put us in money so we can follow the downside until it comes up. Once again, we track the downside, we put the downside on our coding base, run the data, find out what our buy is. We come over here onto limit, and we will prospectively then put the amount in, the amount that we've got in here to sell at the price we want to sell it at, and then we do nothing. We let it go down. If it goes down lower, we cancel that. We reset this price, we put a new one in there, and we just sit around. We don't have to do anything. When it bottoms out and comes back up, we're in an automatic sell position. We're in an automatic buy position, correct that. We're in an automatic buy position from a model that works, guaranteed to work after it's tested. So we'll continue on from here and see how it goes. As I said earlier, you're watching this live as if this was real, money on the line kind of thing. So the market is now going down. It's hit below 703. We'll come over to our trading environment, our coding environment. You can just do this on paper. I just happen to have a coding environment. Put in the new low, just run the code. It's just simple, saves me doing everything else. It tells us we've got a buy difference of 17. Now that's 17 pennies, $17. That's kind of what, 2 sevens are 14. That's a 2%. When we buy back into that, we will have some upside win. So right now the buy into the upside was 714, which we would now lock in. If we were in money, we would take that and say, okay, we'll take the last one out, put the new one in. We would be on a buy because we're waiting for the upside. We're not buying to the downside. We're waiting for it to bottom out. And when it bottom out and comes up, we'll already have our buy price set in there. So the model is working nicely so far. And we've set another low at 702.5. I prefer to go by the whole round numbers. I won't preempt the low end, so we'll say that's 702. Put that in here. 703. We'll go to the upside of that. So that's 703. It hasn't quite reached 702. Put that in there, and there we are. So up to the moment, live action. Put it into the code and update the position, and we'll follow right along, see how it goes. So here again, live as the action happens, we're moving to the upside. Our model says we need to have a buy-in at 714, so we're prospectively coming up on that. The model here is tested to see that it protects your ass and does what it's supposed to do. We've reached a bottom. We don't expect it to go down again because the model has been tested. It's been tested and it's been changed according to what has happened in the real world. So this should be a definitive bottom. We have a $17 difference between the sell and the buy-in. That's like 2.5% up to where we sold it out on its downside, and it's now coming up to another buy back in threshold in about $1 or so. You can look at the depth of the market. So, you know, it's kind of doing its normal thing, but it looks like it'll move up to be a buy situation. It's bottomed out when there's been a big downside, and people see that's downside, they'll just get more confidence and buy back in. So we expect to see it go up. It's 113. One more dollar and we will have executed a buy. If we were in money, that would be set in as a buy. Regardless of how much money I have, I would have it all in there and we would buy everything at that price coming up from the bottom. That's what the model is designed to do, and shortly it'll no doubt do that, and we'll come back later. So back live again, you're getting this feed live as it happens. We've just seen a nice little plummet down. Good for us guys who are in money, prospectively about to trade when we've got enough data, and we are good to go here. So what's the new low? 702. It was 703. It went up a bit, came down, so we can put that in. Run the code and do this on paper, but I've got code. So we've got $18 buffer built in between when we actually activate a buy at 713 and where we last sold, and at what it's going at 700, so that's $7 a click. 2 sevens are 14. We're heading 2.5% plus before we even to get to the where we sold off. I mean, this is it's just a hobby for me. I don't get that excited about it. I get a little bit excited, but not about the money. It's just that it's fun to see the model working and know that I'm developing something that is going to be a very sound position from which to actually put money in there and do something with it. Okay, I'll keep you up to date with how things are going. So we're later on down, and an event has happened that would go against the current model, so we'll have to consider changes. This little down spike here is a variant that really we've got to make policy decisions on, because it's going against the model. So I'm going to make a policy decision on my model that the top and the bottom is on the solids and not on these spikes, because this caused a a activation of the model. So in this case, we would have set this threshold here as the bottom, 703. If we put that 703 in there, it would have activated the model by virtue of this position here, this high here, which goes against what the is actually happening. So this top is 716. We have a bottom set at 703, which puts the difference at 13 units. So there's an example of, once again, something that's going against the model, and in order to alleviate that happening, we make change to the model. That's what the plan is. So I'm updating the model in this situation, making policy and updating the model. Add one on so it's outside of the range, so the model will now go out to 14 plus up and down, and that for me anyway, and that the tops and the bottoms are going to be defined as the tops and the bottoms of these solid blocks. So that would have missed this by a penny, since it would have activated it. If we put 14 in there, we would have got a buy-in at 17, which is okay. So that is being now introduced as policy by me for my model. Not suggesting you do this, you can do whatever you want, but for me this broke the model. So that's what the whole point of testing and me modeling is, to make sure that things work. We don't want that to happen. So that's forcing us to increase the range because of a variant. And so from now on, going forwards, buy-in and up and down position will be 14 points from a solid. So the current new bottom is now down to, since we have now not activated the upside buy because we've changed the model base, we haven't found the bottom yet. So that's good, right? So the bottom is now being set at, ignore this bottom spike here. For me, I'm setting this bottom now at 695, say 695. So the bottom is going to go to 695. It's been reset to 14. So the bottom is now 695, and the buy-in will be set to 709 to the upside on our new model. So there you go. Live adjustment to the model based on a fluctuation, which is what's necessary. That's why we have to follow this and make these adjustments. So the currency levels, Bitcoin levels of Ethereum continue to fall. Since we've had to make a change to the model for me, then the whole of this purchasing has got to be scrapped, because you can't evaluate what these would have had impact on had the range been set to that. So basically I'm going to start this all over again, scrap all this lot. From the current bottom we'll start all over again with a new setting of a $14 up and down base for buy in and sell, and see what happens there. So a major adjustment to the model, and we'll go forwards and start this all over again.